Chapter 1. The game no one told you about your money is not just money, it's power, control, and leverage. And most people have no idea they're being played. In the last 12 months, the US dollar lost over 10% of its value, not in some obscure market. Globally, that kind of drop hasn't happened since the early 1970s. Back when the US quietly removed the dollar from the gold standard. One late-night policy shift, and the entire financial world was flipped upside down. Today, something similar is happening, but it's harder to see, and that makes it even more dangerous. Let's break it down. Every country carries debt. The United States carries more than any other, but instead of paying it off, it just keeps borrowing. And when the interest on the old debt comes due, it borrows again, at higher interest. That's like paying off your credit card with another credit card and hoping it works out. For most people, that's financial suicide. But the US has a trick. It triggers recessions, rising tariffs, currency wars, regional conflicts, sudden real estate crashes. All these moves create global panic. And when fear rises, investors rush to buy what they think is safe. US Treasury bonds, the dollar, Wall Street stocks. This inflow of capital helps fund America's debt again, at high interest. But that only works if the world keeps buying. And that's where the cracks are forming. China and Japan have started dumping US bonds. Even with high returns, they don't trust them anymore. Other nations are following. The US dollar is falling. And when a currency loses trust, it loses everything. So the old strategy, it's failing. And America knows it. But instead of fixing the debt problem, they played a new card. They engineered the problem, so they could also control the solution. What does that mean? It means while the public panics about inflation, war, and crashes, the financial elite are quietly restructuring the system, shifting from public bonds to private influence, using tools like stablecoins to bypass old systems entirely. This isn't random, it's a reset. And if you're not watching closely, you'll be caught holding the bag. Just like millions were in 1971, just like they were in 2008. The game is rigged, and you're not holding the controller. Ever wondered why the same names always seem to win? Even when markets crash, they're not reacting, they're planning. And if you want to stop playing defense, you need to understand the field. Because the rules just changed, and most people haven't even noticed. This isn't fear, it's fact, it's already happening. The passive path shows you how to see what others miss, and act before it's too late. Because the first step to winning a rigged game is knowing you're in one. Let's look at the next piece, the real purpose behind stablecoins, and why they're not as harmless as they seem. Chapter 2, why stablecoins are not just crypto. Stablecoins are being sold as the future of money, fast, borderless, convenient. But behind that smooth surface is a deeper strategy, one that could replace national currencies, and give control of your economy to a company you've never heard of. A stablecoin is a digital token tied to something stable, usually the US dollar. It's not volatile like Bitcoin. It's not printed by a government. It lives on the internet. That sounds useful until you realize it doesn't belong to your country, and it doesn't answer to your laws. Here's what's happening. In countries with weak currencies, people are switching to stablecoins because their own money loses value too fast. They want safety. They want speed. They want something that works. Take Nigeria. Fuel subsidies were cut. Prices spiked. Their currency collapsed almost overnight. People rushed to save what they could, but dollars were expensive to convert. Bank transfers were slow. So they turned to stablecoins. The result? Their economy stopped using the national currency. People paid for groceries, rent, and wages in US stablecoins, not in Nigerian naira. The government tried to ban it, but usage only grew. Faster, stronger, unstoppable. That's not innovation, that's surrender. When people stop using local money, tax systems break. Hospitals, schools, roads lose funding. Governments lose the ability to function. And ordinary citizens lose every safety net they had. Now expand that. Brazil, Argentina, Turkey, Philippines, Venezuela. The same thing is happening. Stablecoins are flooding in. National currencies are bleeding out. And no one's stopping it. Because you can't ban a protocol. You can't shut down a blockchain. You can't control what's invisible. What looks like financial freedom is actually a trap. It's not just people skipping taxes. It's entire governments losing revenue. And when they lose that, they cut services, raise taxes on what's left, or collapse completely. And the stablecoin providers? They don't help. They just keep growing. If your paycheck is in stablecoins, If your savings are in stablecoins, if your prices are in stablecoins, then your economy is no longer yours. The new central bank is a tech firm. The new currency is private code. The new empire doesn't need soldiers, just servers. You might think this doesn't affect you, but if you've ever made a payment online, bought crypto, sent money overseas, you're already part of the system. And if your country has no strong exports, it can't even fight back. Because once the switch is flipped, you don't get to flip it back. The passive path breaks this down so you can prepare. Because the future of money is already here, and it's not what you think. Next, we go deeper into the machinery behind this system, and how inflation is being used to take more than just your savings. Chapter 3, the modern financial empire. Most people think inflation just makes things a bit more expensive. But for the people in charge, inflation is a tool, a hidden tax, a silent thief, a way to extract wealth without permission. Here's how it works. The government prints money. That money costs almost nothing to create, but it's used to buy real things: labor, materials, contracts. It enters the system as purchasing power. Now you, the citizen, still hold the same paycheck, but prices rise, and your money buys less. That gap? That's not a market error, that's profit for whoever printed the money. And this isn't just theory, it's how countries fund wars, infrastructure, and bailouts without asking you directly. In the US, this inflation tax has quietly replaced traditional taxes. Why raise income tax when you can just print and let prices rise? And here's the catch. The more people outside the US use dollars or dollar-based stablecoins, the more America can export this inflation. Other countries feel the price spikes. America keeps the purchasing power. Now combine this with high interest rates. After printing trillions, the US raised rates fast. That pulled money back from around the world. Foreign currencies dropped, and people dumped local assets for US investments. The cycle repeats: print, lend cheap, raise rates, buy back assets at a discount. It happened in 2008. It happened during COVID. It's happening now. Real estate, stocks, farmland, sold off in panic. Then quietly bought by investment firms with deep pockets. Firms backed by cheap dollars created out of nothing. That's not capitalism. That's controlled harvesting. This strategy turns global fear into domestic profit, and when everyone is distracted by headlines, the real moves happen behind the curtain. And now with stable coins, it's even easier. No need to work through banks. No need for complex currency swaps. Just issue more tokens. Push them through global apps. Watch the capital flow back. And if a country doesn't comply, their stablecoin access gets throttled. Their economy freezes. Their assets crash. Then Wall Street buys again. This is the new empire. It doesn't use armies. It uses code. It doesn't invade. It absorbs. And the world is walking into it willingly. If your money is digital and your control is external, your independence is gone. You may live in your country, but your financial system belongs to someone else. This is not a prediction. This is already happening. The passive path exists to help you stay ahead of moves like this, because if you don't see the pattern, you become the product. Next, we explore how the digital dollar war has replaced old-school conflict, and why your bank might be the next casualty. Chapter 4. The rise of the digital dollar war wars used to be fought with tanks and soldiers. Now they're fought with code and currency. Stablecoins are the new battlefield. And the prize is your economy. The US isn't just defending the dollar, it's reshaping it, turning it into something faster, harder to resist, impossible to escape. This isn't about convenience, it's about control. The strategy has a name. In some circles, it's called the Pennsylvania Plan. It has two goals. First, make stablecoins the default for global transactions. Second, convert US bonds from foreign-owned to domestic-controlled. Let's break that down. If people all over the world start using US stablecoins, they're holding a piece of America's debt, even if they don't know it. Why? Because the companies behind these stablecoins use their cash reserves to buy short-term US Treasury bonds. That's how they keep the coins stable. $1 in, one bond bought. So every time someone in Brazil or Turkey or Nigeria swaps their currency for a US stablecoin, they're funding America. Without voting, without knowing, without benefit. Now imagine that scaled to billions of users. No more need to beg foreign governments to buy US debt. The citizens are doing it for them. Voluntarily, digitally, daily. The second goal is even deeper. Make US debt a closed loop. Owned not by China or Japan, but by financial institutions controlled by Washington. Think about Japan. They owe more than twice what the US does. Yet their bonds are stable. Why? Because most of that debt is held by domestic banks and pension funds, all aligned with government policy. No risk of mass sell-offs, no external pressure. The US wants the same setup. How? By letting Wall Street firms create credit out of thin air, then use that credit to buy long-term government bonds. 10 years, 20 years, locked in. In return, they get guaranteed returns. If a firm had $1 billion in assets, it could be allowed to lend out $10 billion, use $2 billion to buy bonds, earn 5%, risk nothing. Where did the extra money come from? Nowhere. It's just numbers in a database. But the interest is real. The power is real. The control is real. And when those bonds are no longer held by outsiders, no one can dump them and trigger panic. It's a closed system. Tight. Resilient. Dangerous. Because if the government controls the debt buyers and the currency users, it controls the entire economic cycle. It can raise rates without backlash, print money without fear, shift markets without permission. And if your country isn't aligned, it gets shut out. No trade, no access, no escape. This isn't about helping the unbanked. It's about building a digital fortress, one that stretches across borders, into your wallet, into your job, into your life. The passive path shows you how to stay outside that fortress, not as a target, but as someone who understands the game. Next, we look at what all this means for your daily life, and how these invisible wars affect your paycheck, your savings, and your future. Chapter 5, What Happens to You? This is not just about governments, this is about your job, your savings, your future. When a country loses control of its money, the impact hits people first. Not politicians, not corporations. People. When stablecoins replace local currency, governments lose their ability to collect tax through inflation. They can't quietly raise prices anymore. So they do it the hard way. They raise actual taxes, or they cut spending. Hospitals close. Schools shrink. Public transport breaks down. Clean water, safe roads, basic services, all disappear. Because the system that once funded them is now bypassed. Money flows through private networks. Invisible, untaxed, unregulated. Now imagine you're a business owner. You play by the rules. Pay your taxes. Use your country's banking system. Your competitor? They use stablecoins. No paperwork, no taxes. Lower costs. They undercut you. Steal your customers. And you lose. That's not competition. That's sabotage. Now imagine you're a worker. Your paycheck hasn't gone up in years, but everything costs more. Groceries, rent, gas, insurance. You're working harder for less because your money is worth less, because your country can't manage its currency, because stablecoins took away their control. Now imagine the worst, a run on the banks. People rush to withdraw money to convert it into stablecoins, to protect what little they have. But banks don't have that cash. They've lent it out, they collapse. Now your savings are gone, your credit is frozen, your employer can't pay you, your landlord can't collect. Everything stops. To survive, the banks need dollars, but the dollars are tied up in stablecoin networks, so they go to the source. The US lends at whatever rate it wants. 10%, 20%, whatever it takes. If your country says no, the economy dies. If they say yes, the debt grows. And the people pay. This is how control works. Not with threats, not with violence. With dependency. You need the system more than it needs you, and once you're in, you can't unplug. That's why the passive path is here, to show you how to build income streams outside of fragile systems, to help you store value in places that can't be erased with one policy shift, to help you act before it's too late. Next, we break down how the wealthy are using these shifts to quietly buy the world, while everyone else is distracted. Chapter 6. How the big players profit when markets crash. Most people panic. The wealthy don't. They plan, they buy, they wait. Every financial crisis is a transfer of wealth, from the unaware to the prepared. Here's the formula. Step 1. Inflate asset prices. Print cheap money. Flood the market. Let stocks, real estate, and crypto rise. Step 2. Pull the plug. Raise interest rates fast. Dry up liquidity. Force a crash. Step 3. Buy the dip. Use strong dollars to buy distressed assets, land, companies, infrastructure. This isn't new, it's repeated. In 2008, millions lost homes. Investment firms bought entire neighborhoods for pennies. Those homes now rent back to the same people who lost them. At higher prices, in 2020, stimulus flooded the economy. Markets soared. Then inflation hit. Then rates spiked. Then came the sell-offs. And again, the same firms bought back in, at discounts, with leverage, with no competition. Now with stablecoins, it's even easier. No need to wait for a crash. Just control the currency flow. If a country resists, restrict access, trigger panic, watch local assets fall, step in and buy. The tools are digital, but the gains are real. Real homes, real companies, real power. And while most people argue on social media about who's to blame, the deals are already signed, because it's not about left or right, it's about knowing the system, or being used by it. This is why knowledge matters, why timing matters, why being prepared matters. The passive path isn't about fear, it's about clarity, so you can be on the right side of the next cycle. Up next, we uncover how total economic dependency is built, and why many countries are already past the point of no return. Chapter 7, the final trap, global dependency. Some countries print their own money, some don't anymore. That's not a future risk, that's now. When people switch to stablecoins, they give up their national currency. It seems harmless at first, but the long-term effect is economic dependency. Think of a country without major exports. No oil, no tech, no luxury goods. If that country issues its own stablecoin, who would use it? No one. Because a currency only has value if someone wants what you sell. No demand means no adoption. So these countries have to choose. Use someone else's stablecoin. Usually the US, sometimes China, rarely Europe. And that's the trap. By using a foreign stablecoin, they lose control of supply. They lose the ability to print. They lose inflation as a tool. They lose tax through money creation. They lose leverage. Now imagine this at scale. A global economy where every transaction flows through private stablecoin networks. Governments can't see it, can't tax it, can't influence it. And if those networks decide to change the rules, too bad. Interest rates, controlled externally, money supply, set elsewhere, credit access, approved or denied by a foreign platform. Even worse, if a country pushes back, they can be shut out, frozen, digitally cut off from trade, without a single shot fired. That's not just loss of control, that's economic submission. Now look at Nigeria again. They banned stablecoins. The result? Stablecoin use skyrocketed, because you can't regulate what you can't reach. The same could happen in other places. People want speed, simplicity, security, but what they're getting is exposure to forces they can't influence, to systems they can't fix, to decisions made in boardrooms half a world away. If your savings depend on someone else's server, you're not safe. If your country can't defend its money, it can't defend you. This is the new reality, and it's spreading fast. The passive path helps you break free from fragile systems before they decide what your future costs. Next, we lay out what you can actually do, practical steps to stay ahead, stay protected, and build your own safety net. Chapter 8, what you can do about it. You can't control global finance, but you can control how exposed you are to it. Start with what you earn. If all your income comes from one place, you're vulnerable. Diversify your income streams, freelance, digital services, online products, cash-flowing assets. You don't need 5 incomes. You need more than one. Next, control what you spend. Track every dollar, cut waste, focus on essentials, build margin into your life. Margin creates options. Then look at where your money sits. Is it all in one currency, one account, one system? Split your savings. Keep a portion in your local bank. Hold a portion in hard assets, like gold or land or commodities. If you trust stablecoins, don't keep everything in one. And don't just save, invest. Start with what you understand. Low-fee index funds, dividend-paying stocks, cash flow real estate. Don't chase hype. Don't follow trends. Follow cash flow. Next, pay off toxic debt. High-interest credit cards. Bad loans. They eat your future. Cut them out. Fast. Then, protect your data. Use strong passwords. 2-factor authentication. Secure wallets. Financial freedom also means digital security. Learn basic economics. Understand inflation. Understand interest rates. Understand what your central bank does. You don't need a degree, just clarity. Build emergency reserves. 3 to 6 months of expenses. In cash. Accessible. Stable. Then, connect with people. Start conversations about money. Share strategies. Compare notes. Isolation makes you weak. Community makes you strong. Finally, move with purpose. Set goals. Monthly, yearly, long-term. Automate what you can. Track what you must. Adjust when needed. This isn't about panic. It's about preparation. Knowing the system. Working around it. Staying one step ahead. That's what the passive path is built for. Clear, actionable moves you can make, even in chaos. Especially in chaos. Next, we define what financial freedom actually looks like, and how you can build it even if you're starting from zero. Chapter 9. How to build true financial freedom. Financial freedom isn't about being rich. It's about control. Control over your time, control over your choices. It starts with ownership. You need to own things that work for you. Assets that pay you even when you sleep. Rental income, stock dividends, online businesses, royalties, interest from lending. If your money only moves when you do, you're stuck. Freedom means leverage. To build leverage, track your money. Know where it goes. Know what returns it brings. Know what drains it. No more guessing. No more ignoring your bank statement. Start with a simple budget. Income at the top. Fixed costs in the middle. Investments at the bottom. Every dollar should have a job. Next, automate your progress. Set up auto transfers to savings. Auto invest into your portfolio. Auto pay your bills on time. This reduces decision fatigue. It keeps you moving forward, even when life gets messy. Then build habits. Wake up early. Read daily. Review your finances weekly. Invest monthly. Small actions compound. Discipline beats intensity. Find a system that fits you. Then stick with it. Ignore noise. Ignore trends. Ignore get-rich-quick distractions. Real freedom comes from consistent action. Stay flexible, but stay committed. Track net worth. Track passive income. Track time freedom. If your money buys back your time, you're on the right path. If it doesn't, make changes. This is your life, your time, your call. The passive path is here to support that journey. Not with hype, not with gimmicks, but with clear, honest strategies that work in the real world. Next, we look at where this financial shift is heading, and how to prepare for what's coming faster than most expect. Chapter 10. Stay ready for what's next. The financial system is shifting faster than most people realize, and not in your favor. Digital currencies are rising, old systems are crumbling, control is consolidating, the dollar won't disappear. It will evolve into something more digital, more monitored, more centralized. Stablecoins will grow, used by millions, then billions. Not because people trust them, but because they're easier, faster, cheaper. Governments will follow. Central bank digital currencies, programmable money, limits on what you can spend, where, and when. Privacy will shrink. Freedom will depend on permission, and your financial decisions will be tracked by default. But none of this is guaranteed. You still have choices. Where you keep your money, what you invest in, how you earn, how you live. Choose systems that give you freedom, not just convenience. Choose skills over speculation, cash flow over hype, clarity over noise. Don't wait for things to get worse to start paying attention. Start now. Start small, but start. Your future depends on what you do today, not what governments promise, not what headlines scream, just your actions, your discipline, your awareness. That's how you stay ready. The passive path is built to help you through this shift with no-nonsense strategies and a focus on freedom. Like the video, subscribe for more, and share it if it opened your eyes, because the world won't wait, and neither should you.